Dear colleagues, good afternoon. I'm very happy to see all of you here. Let us begin the press conference by the Governor of the Bank of Russia, Mrs. Elvira Nabiullina. First, we'll hear the statement by the Governor following the results of the board meeting. Good afternoon. Today, the Board of Directors has decided to cut the key rate by 25 basis points down to 6.25% per annum. We will consider the necessity of further key rate reduction in the first half of 2020. Let me dwell on the main factors behind the decision. First, annual inflation continues to decline faster than we expected. Our revised inflation forecast for the end of this year is 2.9 to 3.2%. Meanwhile, average 2019 inflation will stand at 4.5%, which reflects the high price growth rate in late 2018 and the first months of 2019. This significant slowdown in inflation in the second half of the year was caused by joint action of a number of disinflationary factors, both temporary and more persistent. These factors include an increased supply of individual food products due to a bumper harvest. Also, price growth of imported goods is still limited due to the ruble appreciation and inflation deceleration amongst Russia's trading partners. At the same time, moderate demand, both external and internal, is a more persistent factor. The proportion of temporary and persistent factors has yet to be estimated. Most indicators that we analyze reflect low inflationary pressure. Annual core inflation is declining at the same rate as the headline consumer price index. Both indicators were registered at 3.5% in November. Seasonally adjusted monthly price growth has been around 0.2% since June. For food products, this indicator came in even lower in October and November. If we transform these monthly indicators into annualized form, the result will be lower than 4%. However, looking at the key product groups, while annual food and non-food price growth keeps falling, services prices increased slightly faster in November, with their growth rate reaching 3.9%. This was mainly owing to the market services segment, which could be an early sign of a potential revival of demand. Survey results also indicate an improvement in consumer sentiment. As to the next year, our inflation forecast for the first quarter is below 3%. This decrease will be temporary. It is in line with our expectation and is explained by the fact that the VAT rate increase will be factored out from the calculation of annual inflation in the second half of the year. Inflation will be returning to around 4%. This will be helped by the monetary policy easing that the Bank of Russia has implemented this year. I would like to reiterate that monetary policy measures influence the economy and inflation in a gradual manner. The accumulated effect of the early key rate decisions will manifest itself throughout the whole of the next year. Therefore, it may take some time to assess the necessity for a further key rate reduction. Taking into account the key rate decisions and other assumptions of our baseline forecast, we expect inflation to range within 3.5 to 4% by the end of 2020. Moving forward, the monetary policy pursued will keep annual inflation close to 4%. Second, household inflation expectations decline, but stay above the lows registered in April 2018. However, the perception of inflation by households is gradually changing. We see that inflation expectations are forming now at the level that is lower than the one observed amid comparable price dynamics in late 2017, early 18. This is largely associated with the recent trend for average inflation to be much lower than before. The inflation volatility range has also narrowed. However, inflation expectations remain sensitive to changing prices of individual goods and to one-off events. In our policy, we take into account the fact that we need more time to fully anchor inflation expectations. Business price expectations decreased in the first half of the year and have remained generally stable during the last few months. Midterm inflation expectations of analysts and professional market participants are close to 4%. Third, monetary conditions are easing, and this process will continue mainly due to the earlier key rate decisions. OFZ yields stay at their lowest levels for the last few years after the October key rate decision. Interest rates in the deposit and credit markets are going down. I would like to specifically point out that the interest rate on housing mortgage loans extended in October fell to 9.4 versus 10.6% in May. At the same time, real deposit rates remain positive, taking into account inflation forecast, which supports the attractiveness of savings. Our estimates suggest that there is still a certain potential for a further decrease in loan interest rates. We will assess further adjustment of monetary conditions, in particular, gradual changes in interest rates in various market segments, as well as monetary indicators, their further effect on economic indicators and price dynamics. This is a lengthy and gradual process. Our further monetary policy decisions will depend on its development and consistency with our expectations. The most important factor that we analyze today is the situation in the economy. We expect that GDP growth rates will be closer to the upper bound of our forecast range of 0.8 to 1.3%. The Q3 results show that economic growth accelerated to 1.7%. Industrial output keeps growing. In October, after a prolonged slowdown, we saw an increase in annual retail sales growth. This was supported by an acceleration in real wage growth, largely due to inflation slowdown amid relatively unchanged nominal wage growth. Starting in September, we have observed a notable increase in budget spending on national projects. In the second half of the year, government investments started to support economic growth. At the same time, we have yet to estimate the stability of high economic growth rates. Demand remains contained in general. Various investment activity in business sentiment indicators show mixed dynamics. In particular, new order expectations in the industry, especially in the exports, remain low. This reflects a slowdown in global economic growth, continuing global trade tensions, and geopolitical risks. These are all restraining factors for our economy. Regarding the three-year forecast horizon, our expectations here have not changed overall since October. We expect that the GDP growth rate will gradually increase to 1.5 to 2% in 2020 and to 2 to 3% in 2022. Successful implementation of national projects should provide the largest contribution to the increase in growth rates. This will support internal demand, while external conditions remain a factor of uncertainty in the forecast. As regards oil prices, last week, the OPEC Plus countries reached a deal to extend oil production cuts until the end of March 2020. As of now, we stick to a conservative assumption for oil prices in our forecast. Their reduction to $55 per barrel in 2020 and to $50 per barrel in 2021 and further on. We will adjust this opinion depending on, amongst other factors, future changes in the OPEC Plus agreements and global demand for energy commodities. As to the balance of payments, we have slightly adjusted some indicators for this year, taking into account the actual data available. Let me remind you that the current account balance will gradually decrease over the forecast horizon, remaining sustainably positive, approximately to 3% of GDP in 2020 and to 1 to 2% of GDP in 2021. This is associated with oil price trends and external demand. The financial account balance of the private sector will shrink to about 1% of GDP in 2020 to 2022. As usual, making our decisions, we also factored in risks. We are currently talking a lot about disinflationary factors, and they do prevail for the moment. However, there are also pro-inflationary risks over the forecast horizon. First, such risks are associated with external factors, which include the world economy and global financial markets. Second, it is hard to exactly assess the extent to which the inflation slowdown in the food market is caused by temporary factors. The timing and the likelihood of the turnaround in the dynamics of the intensity of balancing changes in food prices given the current low base. Third, as we have noted, the aggregate effect of 5 earlier key rate cuts will be gradual and its estimation will take time. As for the fiscal policy, the situation seems more balanced in terms of its effect on inflation in 2020, given that budget spending, including into the national projects, will be distributed over time. Let me remind you that the next policy meeting of the Board of Directors will also be a core one, same as today. This is associated with the changes in the schedule of the Board of Directors' policy meetings. We are going to sum up the results of 2019 at our next meeting. We will then have detailed data on GDP for the third quarter, preliminary data on the balance of payments for the entire 2019, as well as current economic statistics for December and first data on inflation in January. We will also adjust our mid-term forecast based on this information. Winding up, I would like to yet again get back to the signal of our future actions. We have said today that we will consider the necessity of a further key rate reduction in the first half of 2020. Noting that, after similar signals in the past, it was twice that we cut the key rate already in the next meeting, namely in October and today, and anticipating your clarifying questions, I would like to point out the following. This wording means that we still see some room for a slight decrease in the key rate, but both in February and at the next meetings, we will comprehensively assess the reasonableness and relevance of such decision, taking into account the entire range of new data that will be available by that time. Our signal does not imply that we will necessarily lower the key rate in February or in the first half of 2020. A further key rate cut will become possible only if our analysis confirms that this is needed to bring inflation back to the Bank of Russia's 4% target. Thank you. Thank you. Dear colleagues, let us now do the Q&A. Please introduce yourselves and do not forget to announce your publication. Rita? Thank you very much. It was very interesting. Elvira Nabiullina. The central bank is discussing the... Yes, indeed, we are considering the issue of how, amongst other things, using the National Endowment Fund above the level of 7%, how it is going to take place, because during this time the Minister of Finance is going to sell the foreign currency. Yes, we have debated this issue, but in our mind, in terms of any automatic netting or mutual settlements of our delayed purchases along with such Minister of Finance expenditures is hardly possible, because our delayed purchases are very much even. We have announced that time frame, and so the Minister of Finance expenditure are not going to be so even. And in the meantime, we do not understand what is going to be the time frame for that. So we believe that it will hardly be possible to currently talk about any netting. Yes, please. Dear colleagues. Is there any question? Yes, Masha, go ahead. You know that we are continuously discussing this issue, and it is true that it is something that comes up regularly. There are pros and contras. I mean, on the pro side, this is obvious. I'm not going to enumerate everything because to the market operators, this monetary policy seems to be quite predictable. There are certain contras, and primarily whenever we publish our forecasts, the significant number of the financial market players may perceive it as something compulsory. And in our mind, if this is the way it is being deemed, that may have certain negative consequences for the economy when the market players are going overly relying upon something that may not come true. And that is exactly why, like previously, we believe that negatives are more numerous than the positives. Undoubtedly, we will continue this kind of an analysis, and in due time, the view may change, although I do not know at this point in time to what extent, particularly since such forecasts of the key rates are not being published by the majority of countries, only by the select countries, and many know the kind of negatives that we are looking at. But nevertheless, we would like to be more predictable, indeed, for the market players, and we do see in this an absolutely positive effect once the market players understand our policy better and there are fewer surprises for them. You know, another thing that was discussed, publishing protocols, because we were asked questions, and so we were asked to publish the minutes of that. But I would like to say that we are publishing much more detailed press releases compared to the central banks of the countries who publish the minutes afterwards, because the publication of the detailed press releases is taking place immediately, while the minutes are taking some time. On top of that, as you may know, we have carried forward our reports on the monetary and fiscal policy, which take place in a week's time after the debate, effectively reflecting the subject matter of the debate that is taking place during the board meeting. So in many ways, we are disclosing more elaborate data, and through the publication of the report, we are trying to give more information about the rationale behind our decision-making so as to make our activities more transparent. Yes, Gulia? Gulnara Vahito from RIA Novosti. I have several questions. In the press release, there was such a wording that the monetary fiscal policy may provide the upward pressure upon inflation and more substantively influence it than compared to what the Bank of Russia considers. Are you talking about the consequences of the price reduction in 2018? And my next question, what does Bank of Russia see as the reason for the appreciation of the ruble exchange rate? And my other question is about the development of the mortgage lending. After your today's decision about the key rate, you said that this may bring about a certain easing of the lending tensions and consequently bring up some activity in borrowing next year. As far as the cumulative effect is concerned of the 5 previous easings of the monetary fiscal policy this year, yes, indeed, we need to assess it. And such an aggregate effect is going to play itself out within a certain period of time, because we do see that our aggregate effect from the monetary and fiscal policy, the transmission of it in terms of effect works in between 2 to 6 quarters. Primarily, this effect reflects itself upon the prices in the economy within 12 months. So we had several decisions in a row. So this will be an aggregate effect, and the economy will be adjusting itself to the consequences of this decision. But this is an easing effect, the kind which is aimed at easing the monetary terms. And that is taking place. We simply believe that it is not yet over, that it will be having a prolonged nature. Next, in as far as the appreciation of the exchange rate is concerned, that occurred under the influence, the oil prices remained quite stable, and so there was a capital inflow into the economy within this particular channel. And in as far as the mortgage lending rate is concerned, it is very high. It will remain high because there is a potential for the mortgage lending to grow. Indeed, the recent data from this, the mortgage lending rate is 9.4%. This is really a historically low point because the previous minimum was 9.41. So, I mean, that is the November data. So we do believe that in December the rate is going to be further down, and we do see the potential for the rate to go down to 7-8%. The mortgage lending growth is going to be quite high. Our estimate, which we haven't yet reviewed for the next year, will be about 20%, because currently it is at 17%. So on top of it, we are adding, and every time I am reiterating that it is very important for us to sustain very high quality of the mortgage loans. So together with the marketplace, we are discussing the debt burden indicator when offering mortgage loans to the borrowers. Interfax Agency, I would like to go back to your signal, because previously, yes, I'm here. Because doesn't mean, I mean, the wording that is in your press release that you are going to assess the appropriateness of reducing the rate in the first half of the year. And in terms of what you said, it doesn't mean that the rate is going to be automatically reduced during the next board meetings. I mean, the probability of this time off for it is stronger. Second, the Minister of Finance have prepared an amendment into the budget codes in terms of the endowment fund. Your wording in terms of the assessments of this particular factor hasn't changed in your press release, but there is already data out. Do you believe that if the risk from investing these funds and providing loans to other nations, is there a risk in that? And another point, do you see any possible risks from the changes of the FX structure of the National Endowment Fund, now switching to other currencies, and the possibility of the yield from these holdings to go down? The phrasing about that we're going to consider the appropriateness of reducing the key rate, it means that the probability is exactly the same, but in terms of the time frame, it may be taken later. So we intentionally cited it the first half of the year. But nevertheless, this room is remaining. But when this decision room is going to be used will depend upon the incoming data and upon our ability to further specify the forecast in terms of the overall economic development. Now, the next question is about the National Endowment Fund spending. Yes, you may recall that we raised a bit of a concern about the uncertainty of the way the National Welfare Fund is being used when it reaches a certain level. But whatever is currently being proposed as a solution, I mean to say that this amount within 1 trillion for 3 years, and if it is evenly distributed, we do not see any major macroeconomic consequences. The details we will be able to take into account once the details of this decision are made available, but we do act on the basis that this is going to be even and based on the transparent principles, which is something that the Minister of Finance is stating. So we cease to mention it as a risk, acting on an assumption that the decision will be well balanced. Now, in terms of how these funds are going to be spent inside Russia or abroad, that might more be affecting the efficiency, the potential economic growth rate generally, but the macroeconomic stability is not going to be susceptible to that, definitely. Yes, and the National Welfare Fund currency structure. Yes, it is true that by way of one of the factors, we do take into account the currency structure of this, but in terms of our future activities to manage the FX assets is something that we refrain from disclosing. Yes, Elena, go ahead. Reuters agency, could you please tell us? In October, you stated that the Bank of Russia is expecting the Fed to reduce twice its key rate next year. And so how is your forecast changing in view of it taking place, and what is your assessment of the level of the neutral key rate in Russia? We have taken into account the recent Federal Reserve Bank decisions. We do not expect the Fed to change the key rates next year. This is written into our forecast. And in as far as the question of assessing the level of the neutral key rate is concerned, we haven't changed it. Our assumptions remain that the range of the neutral key rate is going to be 6-7% in nominal terms. In order to reassess this level or the range of the neutral key rate, we don't have enough data because for a very short term, the economy has been within the key neutral key rate policy. We entered into the area of the neutral key rate policy based on what we see only in the middle of this year. So we need to accumulate information in terms of all possible indicators in order to understand to what extent this is really a neutrality. And this rate change, to what extent it conforms to our 4% target inflation level, so as to assess all of this factor. And so to speak about changing this assessment of the neutral key rate range is premature. Dear colleagues, we've got too many questions this time coming from the regional correspondents. Let me just read out a few of them. Evgeny Chechkin, Ural Business Consulting from Yekaterinburg. He's asking, is it dangerous for regional economics to see any further inflation going down? And what are the factors which affect it? Similar questions we see from RIOM's agency from the Central Federal District, from Yekaterina Titova, from Nizhny Novgorod, Bank and publication. It is not dangerous. On the contrary, low inflation is conducive to the economic rates going down, lending being more affordable, real household incomes growing, but at the same time we believe it important to maintain inflation within the midterm outlook at the level of 4%. We think that this is the most adequate level for this country's economy. And it is true that inflation is fluctuating. It may go below 4%, above 4%, under the influence of diverse factors, primarily timely ones. And so our task is to bring it back to 4%. And so we've got the whole toolkit in order to do this. And you may recall when inflation started growing last year, and last year we started with a low inflation, much lower than right now. Inflation reached 2.2% then, and before the end of the year, let me remind you, it grew up to 4.3%. And later on, in the first half of the year, it peaked to 5.3% due to understandable events, due to VAT hike, amongst other things. But we've got all the necessary instruments in order to bring it back to the target level of 4%, irrespective whether it is above 4% or is it below 4%. But our activities certainly do depend upon the way we evaluate the factors which push inflation away from the target. If these are temporary factors and they will play out their effect in a certain period of time, maybe there is no need to switch on the monetary and fiscal policy measures. If we see some permanent factors, we do apply the monetary and fiscal measures. And once again, let me remind you that our overall policy is to return inflation to 4% target and keep it there. Yes, colleagues, Dmitry over there. Dmitry Butenko, Kommersant publication. 2 questions, if I may. Sometime since the end of summer, the central bank press releases about the key rates. There was a phrase that the pre-inflation risk on the part of the public spending are not high, and that any growing spending will have a more distributed nature in time remains unchanged. Now the circumstances are changing, so the idea behind this particular phrasing can automatically change. Could you be more specific what it will mean? What do you specifically mean in this sense for the first half of 2020? And my second question, in the aggregate demand, the reasons of weak public demand are defined, but how do they correlate to a weak household demand? What are the key factors which may explain this? Thank you very much. Indeed, apparently,
we have been repeating this particular statement about the budget spending. We started paying particular attention in our press releases to the budget spendings due to the fact that last year such a very clear unevenness in terms of the budget spending was defined. It has always been there. We started trying to figure out its seasonality, but there were certain events taking place due to the launching of the national projects. Clearly, that required certain preparation and organizational activities. And so this lack of evenness raised the concern about how, in terms of the quick period of time, the spending which didn't occur during the previous periods is going to take place later on. So we're getting convinced that it is definitely going to be well distributed over time. We do not see any risks, and so if there are not going to be any risks, we will be thinking twice whether we should really touch upon this topic in our press releases. The second question was about the aggregate demand. Actually, it has been also not a very similar one in terms of in between different periods. We see that in the second half of the year, the public demand has been growing, and the budget spending do play very much of a stimulating nature. The consumer demand also started growing, actually, simply because of the lower inflation, despite the fact that the consumer lending, the rates of growth are slowing down, but we do see the data of the retail turnover that it has slightly started recovering, but the household demands is quite weak. Household investments do demonstrate the propensity to go down, and that is a reflection of the investment environment and the need for the structural reforms, because without doubt the economic demand demands not only and not as much on the fiscal or monetary policy, amongst other things. It is very much dependent upon such things as the willingness to invest and the investment attraction and the environment. And so within these particular points, the demand is still weak. Yes, Andrei, go ahead. Good afternoon. Andrei Birykov, Bloomberg. Do I correctly understand your questions that you're not planning to change your monetary range? And that next year it will be 6% and it won't change. Dear colleagues, you should know that we are not. You are suggesting that we should make a clearer statement about the key rate trajectory. Once again, what we would like to repeat that we do see the possibility for it to further go down. And so the neutral range, the low boundary of the neutral range, we haven't yet reached it. Therefore, there is potential, but when it is going to manifest itself will certainly depend upon the factors that I have listed above, about the data that we receive, about the way we assess the effects which we're not able to assess them simply because we don't have the required data. The temporary and persistent factors, if the temporary factors were disinflationary to a larger extent, which conditioned the inflation going below the target, and this temporary factor cease to be, and then the response on the part of the fiscal and monetary policy will be slower. But we need to assess it. But we do see the time frame for this, and we do see the room for it, but when it is going to take place. The economy is continuing to develop, life is not standing still, and that is why exactly we meet ever so often during the Board of Directors meeting to revisit our thinking. Colleagues, a few more questions from the regions. Inessa Pitonova from Ulan-Ude, Buryatia. Argus TV companies are saying, you mentioned the possible reduction of the mortgage interest rates. How high is the probability for it? And Mr. Kustov is interested in the rates for the deposits and loans, what will happen to them because of the key rate changes. Natalia Gatsova from the North Ossetia newspaper is really raising a very strong issue. Why our lending rates are amongst the highest in the world? Well, I've answered somewhat about the mortgage rate. We do note the potential for the mortgage rate to go further down to 7-8%. We do see this as quite realistic. But overall, the deposit rates and the loan rates in the whole economy, we do anticipate that these rates will further decrease, simply because it was several times that we reduced the key rate, and this translates itself upon various rates going down in the economy, particularly the deposit and the lending rates. I would like to particularly underscore that the deposit rates do remain very attractive for savings. This is also very important because whenever we are looking at the rates as such, this covers the lending rates, because everybody wants the lending rates to be lower while the deposit rates to be higher. But they always have to be some sort of a balance between themselves. We do say the lending rates make lending more affordable, while the deposit rates, they do leave the possibility to maintain certain attractive forms of deposits. And as far as the highest in the world rates, nominally, indeed, our rates would seem high. But if you take a look at the real terms, with the reduction of inflation in many countries, inflations are lower and the inflation targets are lower. And so with this in mind, our real rates, they are somewhere at the same level like in the case of the countries with the emerging economies. And we do see that the affordability of loans is growing. This is no longer one of the first top problems for the enterprises as well as for the small businesses. Thank you. Yes, Evgenia, go ahead. Thank you, Evgenia Pismenaya, Bloomberg. Two questions, 1.5 more precise. The first one, traditionally, about the stupor in our economy. People are not really active in spending money because they don't have enough money, and the government is not able to spend that the amount of money that it has collected from people through the raising of taxes. Based on the Russian audit chamber, there's going to be 1 trillion people that is not going to be spent. This is unprecedented. It's never has been like that before. So what do you think? What are we to do about it? The answer about the structural reforms should not count, because we didn't have structural reforms in the past, but the spending was better. Maybe the taxes shouldn't have been raised, right, in order for the people to be able to spend this money for themselves, and there would have been a much stronger demand and the economy would have been much more active. They collected the money, but they're not able to spend it. That was my first question. And the second is more about kind of a Christmas period time. Christine Lagarde, the head of the European Central Bank, yesterday, when she was asked, who is she? I mean, there are various metaphoric, like the hawks or the doves in the financial markets. She asked to call her by a wise creature, an owl. What kind of a bird are you, Mrs. Nabiullina? Let me answer the second question. I'm not sure whether I'm any bird at all. Now, with respect to the first question, I absolutely disagree with you. I mean, that one shouldn't take into account the structural reforms. That is exactly what we should talk about, because that is the basis for the economic potential to improve, and a very kind of a sustainable basis for the individual incomes to grow. The fact of the matter that throughout many years the real incomes have been supported, amongst other things, by using the oil rent in the economy. We are aware that on the one hand, to completely rely upon the high oil prices to provide for a high quality of life, at least is very short-termist. This is not the way to resolve it. High prices, high income, low prices, low income, or we're looking for some other necessary ways to boost up the individual incomes as well as the public spending. So that is why the fiscal rule was introduced, which teaches us to sustain under the conditions when our level of life, our economic development do not depend upon the energy prices and their high levels. Quite naturally, these structural reforms should also affect the improvement of the quality of management at all possible levels in order to be able to move in the more effective way to spend this money. VAT was raised in order not to simply increase spending for the sake of spending, but to debottleneck the economy, which alongside with the structural reforms would enable us to sustainably improve our economic growth. We do need investments into infrastructure. This is straightforward because certain private investments are not going to take place if there is no logistics necessary in the economy, if it is not possible to deliver the product. So unbottling the narrow points in the economy, you need to have the public spending for that. Now, improving the quality of services in education, in healthcare, the new economy requires a totally newly educated and trained workforce and employees, and certainly these kind of spending is absolutely necessary. We have always emphasized from the macroeconomic viewpoint that this should not only be just an amount of money spent, but there should be an effect of potential growth, because if the economic potential doesn't grow, and this will certainly affect the productivity of labor, if the potential doesn't grow, that will just mean pro-inflationary effect and a short-term improvement of economic growth, simply because GDP takes into account the money spent while we need growth. That is why I think that an effective execution of national projects is indeed capable of improving economic growth rates, and we reflect it in our base forecast towards our forecast period, understanding that that requires time. Now, in terms of whether you can do it faster or a little bit slower, I mean, this is not the question to me. Yes, Nastya, please. A central bank on a regular basis makes a decision about the anti-cyclical markup and the risk ratios. Another one should take place in December. Do you see the probabilities as the anti-cyclical markup is changing? Do you see the probability of the risk ratios to grow with respect to the very same consumer lending, or maybe certain changes in the mortgage lending? With respect to the consumer loans, we do not see yet the need to raise the risk ratios, because we do ascertain that the measures that we undertook, not only in October, but also since the middle of last year, do generate effect, and the consumer lending currently is slowing down according to the rates that we've expected. Without doubt, we're going to monitor it further, and if something requires change, we'll be ready to do that through increasing the risk ratios. You know that we have submitted a proposals to introduce yet another instrument to regulate things in this country, macro-prudential regulation, which is the quantitative limitations following the example of many countries, but we need to have certain legislative changes for that. Right now, we do not see the need for such quantitative limitations. This is for the future, understanding the fact that having any act being built through the Russian parliament takes some time. And as far as the mortgage lending is concerned, we do see the appropriateness to introduce the control over the debt burden when issuing mortgage loans. And we are having a discussion about it with the market. It doesn't matter, I mean, which reason is behind the debt burden that an individual has, as long as she is not able to serve this loan, because the mortgage loan, when it's being issued, the banks have to act on an assumption that the debt burden shouldn't be excessive, that the borrowers are in a position to serve it, while they're simply just being satisfied with the fact that the residential property is there as a collateral. So macroprudential kinds of regulation in the consumer lending segments is what we are proposing, and specifically in the first place in mortgage sector. The time of our press conference is coming to an end. The last question, please, Elena. Elena Fabriciu-Naya, Reuters. Could you be specific about the National Welfare Fund? You said that automatic netting is hardly possible, but what is possible then? Is it possible that the sale of currency the Minister of Finance is to do won't be compensated for? We are debating it right now, and I would like to tell you that before anything changes in our procedures, we will definitely make it public in order for all of what we do to be predictable. Dear colleagues, thank you very much. Thank you. And Happy New Year. Yes, Happy New Year.